Welcome back to the Dividend Diplomats YouTube channel, guys. You've got your boys here, Bert, the Hurt Locker, and Lanny, the Dividend Diplomats, the best dividend investing channel here on YouTube. And it is back for the Dividend Quick Pick Stock Pick Monday, bringing you two stocks we are watching this week.
Can't wait, everybody. Subscribe to the channel. Give this video a nice old thumbs up. And there's one thing I can tell you here. It's been a long time. This is the first Quick Pick Monday. We both had two new stocks. We aren't just rolling one forward. So these are two never before featured stocks on our Monday pick video.
All right, let's do it. We're going to hit them hard. We're going to hit them with Dividend King to start it out. One Dividend King that actually just increased their dividend 7.1% last week for the dividend increase for the year. Guys, we are talking PepsiCo. Ticker symbol PEP for those who think young. Now, guys, Pepsi, icon, competitor to Coke, but they have the snack brand, the Lay's, the Frito-Lay brand, guys. They're in many different industries within their branded portfolio. They announced results, obviously, not the greatest Q4. Revenue was up year over year, but Q4 revenue was pretty flat, but net income was about 2x from prior year for Q4. But I think for us dividend investors, we were all focused on that 7.1% increase. The stock is down this year, Bert, 3%.
Interesting. Yeah, and I know that's fascinating, the results, because we've talked about this when we featured Coke and Pepsi earlier on our channel. There's the rising price. There's going to be that inflection point for soda and pop beverages where the price just went up too much and customers started pulling away. That's what I kept reading about when the earnings release, when I saw the statements and I saw articles. Everyone kept featuring that sales are slowing because that price just climbed a little bit too high.
A little bit too high for the consumer, but man, if there's one thing I'm seeing right now from consumers, is that they just don't want to stop spending money, especially here. We're filming this on Super Bowl Sunday. So
no, they don't.
I wonder how many Pepsi products are going to be consumed today, guys. But we'll quickly go through the metrics. They have a 20.6 PE ratio, dividend payout ratio of 67%, 7% 5-year dividend growth rate, 52 years of growing dividends, 3.23%. 2x what the S&P 500 yields, about 52 basis points higher than their 5-year dividend yield average, down 6% since last year, down 3% this year.
Heck yeah, can absolutely see why it's on your list. That's for a PE ratio. For Pepsi, that's actually pretty cheap, the 20 mark. So easily see why it's the point of this video. You scoot them up your watch list and let's see when you're adding Pepsi. I can take it from here, Chico, if you want.
Throwing you the ball. Let's go.
All right. So the company I'm going to feature, this really shouldn't be a surprise because we just talked about them on Saturday, is Air Products and Chemical, ticker symbol APD. They just got demolished after their last earnings release. We don't need to rehash it too much. Sales were down. Expectations were down. They lowered that guidance down. Earnings per share guidance down into the mid 12s. But you know what? That didn't stop me from buying, because even with that lower earnings per share threshold, their payout ratio is still looking very solid. And that's what keeps bringing me back to them. Picked up 5 shares on Thursday before they left, and they climbed up a little bit, but they're starting to tick back down. APD continues to remain in that buy zone, and it's very high on my list, not only for stocks I'm looking to keep building, but also one of those big positions I want to keep throwing some money at to grow and pay some substantial dividends, at least over the next few months.
Oh man, Bert's putting the mic drop right there, guys. So that's APD and PEP, two dividend colossal stocks here, right, guys?
Yeah. Oh yeah, that's absolutely right. I got so pumped up talking about them, I forgot to tell everyone about the metrics here. I'll just run through them quickly. Their PE is 18, payout ratio is 57%. See, it's still below 60% with that forward guidance. 5-year dividend growth rate's 9.73, even though it was just a 1.1% increase. 41 years of increasing dividend with a 3.22% yield, well above that 5-year average at 2.17.
Oof, there it is, guys. We'll throw out both tickers here on the screen. Bert's looking to buy APD. I'm looking to buy Pepsi. probably around 165. Personally, I want to see a little bit more of a tug back on the Pepsi stock price, just because I'm not sure what the future dividend growth is going to look like. However, they just said screw it, and it still did a 7.1% increase this year. What stocks are you buying, though, this week, guys? Market's about to open here in just a little bit. Put your money where the mouth is, and let's hear it and see it in the comments below.
If you haven't already, subscribe to the channel. Give this video a thumbs up. And Lanny, what do we need to tell these fools out there?
You're either with us or you're against us, Jack. That was Bert, the Hurt Locker, and Lanny from the Dividend Diplomats. Over and out.